Indonesia just fired its finance minister. Markets are shaking, and Singapore investors need to watch this very closely. I'm Iggy, the Investing Iguana, and here's the quick take. Indonesia's new finance minister, Yudi Sadewa, is ripping up the 2026 budget plan. The original budget slashed regional transfers by 25%, the lowest in a decade. Local leaders were furious. Why? Because that cut would force higher local taxes and fuel more protests. Indonesia has already seen unrest from late August over taxes and cash handouts. This is not small. Now, Purbaya says he'll push Parliament to increase funding for provinces, even if it means a bigger deficit. The new plan could reset the whole fiscal direction under President Prabowo. Investors know what this means. More spending, bigger deficits, and more political pressure to keep people calm. But here's the catch. Indonesia already plans a deficit of 2.48% of GDP for 2026. If regional transfers go up, that number climbs closer to the 3% legal ceiling. Fiscal discipline, the cornerstone that kept investor trust under Sri Mulyani, could start cracking. She was respected worldwide for keeping budgets tight. Her sudden sacking signals a shift towards populism and looser spending. So what does this mean for Singapore investors? 3 points. 1. Expect higher volatility in Indonesian bonds and the rupiah. Yields may spike if investors fear deficits. 2. Singapore-listed firms with heavy Indonesia exposure, like banks DBS and UOB, who finance projects there, may see ripple effects. 3. Regional markets take cues from Indonesia. If Jakarta rattles, ASEAN risk premiums go up and Singapore funds get more defensive. My tip? Keep an eye on Indonesian government bond yields. If they rise sharply, regional equities and currencies could feel the drag, including the STI. Don't ignore this. Indonesia is Southeast Asia's largest economy. Its fiscal stance sets the tone for capital flows in the region. Bottom line, the firing of Sri Mulyani, a market icon, is the red flag. More spending and weaker discipline may calm protests at home, but for investors, it raises risk. And when Indonesia sneezes, ASEAN markets, including Singapore, usually catch a cold.